Good morning. You're watching Business World Live. I'm Danie Laurel. It's a little past 10:30 a.m. this Thursday morning here in Manila. We are about 1 hour into the trading day. Let's kick off with our top story. The country's debt has breached the 9 trillion peso mark. That's as of the end of June, as the government looked for more funds to bankroll its ongoing fight against the pandemic. Data from the Bureau of Treasury showed that the Philippines' outstanding debt swelled to a new record high of 9.05 trillion pesos, nearly 2% higher than 8.89 trillion pesos recorded in the month of May. More than two-thirds, or 68% of the debt pile, was sourced from domestic lenders, while the remaining 32% came from external sources. The government is ramping up its borrowing spree from both domestic and external lenders to plug the budget deficit, which is expected to hit 1.61 trillion pesos, or 8.4% of the GDP, due to the health crisis. The Treasury announced that it now plans to borrow an additional 170 billion from the domestic market in August. The agency says it looks to raise 110 billion in treasury bills and 60 billion pesos in treasury bonds. Now, still on the economic front, Bangko Sentral Governor Ben Diokno says the worst is over for the Philippine economy and that the pandemic has already pulled the country to its lowest point. The government previously released its forecast, expecting a contraction of growth of as much as 3.4% this year, but Finance Chief Sonny Dominguez says this is now up for review. And it's not only the government that is seeing a deeper shrink in economic growth in the second quarter. Most analysts, debt watchers, and economic groups also project a lower dip in GDP for the second quarter. Capital Economics, for one, sees Philippine economy contracting by nearly 20% in the second quarter. That's as the strict lockdowns came into full swing. If realized, this would be the steepest decline in quarterly GDP in history, plunging the country into a recession. Despite this, Capital Economics also believes the contraction may have already bottomed out in May. The group noted, however, that the Philippines continues to be one of the worst performing economies in the emerging Asian region due to the prolonged lockdown measures and inadequate fiscal response amid the slump in activity. The central bank remains relatively optimistic, though. Diokno says it will be a, quote, hockey stick recovery from second quarter's low and that the next quarters will likely be stronger. The government has projected an 8 to 9% rebound in GDP growth by next year. Okay, let's kick off the markets from a global perspective. Now, what happened yesterday was a very big meeting in terms of the US Fed, and that was actually a policy making meeting wherein the Fed did leave the interest rates near zero. So, not a lot of movement there. That was largely expected. And they had vowed to use all of the tools to support the recovery of the US economy from a downturn that Chair Jerome Powell had called the most severe in our lifetime. Now, what he mentioned is that the path forward for the US economy, excuse me, will be extraordinarily uncertain and will be dependent in large part on the success in keeping the virus in check. He did mention that the recovery road would be long, but he did say that he was very supportive of the new stimulus package. There is a second stimulus package happening over in the US Congress. He says that is a good thing. The United States is just about to unveil the ugliest GDP report ever recorded, and that will be today, Thursday, along with a flurry of other second quarter earnings. You can see here on my terminal that the three main indices over in the US closed in positive territory. And if you take a quick peek at Asia, Asian stocks also are seeing some modest gains earlier in the trading day, albeit rather mixed. You can actually see the Topix starting on the back foot, down 0.2%. The Hang Seng is in the green, but you're going to be seeing China tilted towards the downside here. So again, a very mixed picture, even if there were some modest gains earlier on after that signal of the Fed that they want more stimulus, and that actually pushed US equities higher. Let's take a quick peek at our own local index. We actually closed in the green yesterday, right ahead of the Fed's decision. But as you can see right now, we are paring back those gains. We're down by 0.4%, back at 5945.2 22 right now. So actually still below the 6,000 level. We haven't gone back there since the entire week. Even as yesterday, actually, most of the trading day was completely in the red, and it was only in the last hour of trading on Wednesday that we managed to close in the green. Now, Chris Mangon of AAA Equities is saying that, the easing restrictions of local businesses. Recall that yesterday, towards the afternoon, there were more news on the fact that the government was more open to easing some restrictions. And he said that that had given more optimism to investors, but still a lot are remaining cautious. And what is very evident here is the low trading volumes we saw yesterday. That was just half of the normal daily turnover, around 3.6 billion pesos yesterday in worth of trade. So not a lot of appetite there. First Metro Securities is saying, though, that the PSEI is poised to register gains today as the positive sentiment on Wall Street may actually come, and bargain hunting will also be expected. But as we can see here right now, we are trading in the red. Hopefully we'll see a repeat of what happened yesterday, wherein the rest of the trading day was not necessarily positive, but we did see a flight towards bargain hunting towards the end. Now let's take a quick peek at some important news in the corporate front. A lot of regulatory stocks are in focus today, in particular water and telcos. Let's take a quick peek at the water stocks here. This amid MWSS, of course, the water the one that is actually looking after the water concessionaires, they have ordered them to explain billing complaints, which they have called alarming. These are from customers following the long months lockdown. So the average billing method was actually implemented from March to May after the meter reading was suspended during lockdown. So they could not deploy the people to check their meters, and the two concessionaires, Manila Water and Maynilad, had been following an average billing method. However, Manila Water has said that in a statement, out of 1 million customers, only 7% had actually sought clarification. And of these people that had sought clarification, 90% was resolved by the call center. They said that they are confident they had followed each and every guideline of the regulators. Concerns. Maynilad, on the other hand, that's of course the West concessionaire, said it had actively implemented measures. They said that only 1.33% or 1.5 million accounts were actually complaining or had inquiries and concerns raised. So MWSS is giving the two water providers until the end of the week to issue an official explanation. And you can see here Manila Water actually not necessarily feeling the pinch. That is actually trading in the green, up by 0.16%. MPIC, however, who does own the bulk of Maynilad rather, is down by 1.6%. Now, speaking of regulated stocks, take a quick peek at telcos. These have been in focus since President Duterte's SONA, where he had warned that they could be shut down if they did not improve their services by Christmas Day. And this, according to PLDT, a lot of news on the telco front, everyone racing for better speed and for a larger network coverage. Smart has now unveiled or has gone live with their 5G network in a commercial sense. So PLDT has started the commercial rollout of its 5G service. It's what they call super fast data. That is starting today. So what's going to happen is that several areas, particularly Makati Central Business District, Bonifacio Global City, Araneta, SM Mega Mall, so specific areas will be able to use this service with smart certified handsets that have 5G activated SIMs. So they're going to be launching certified devices from Huawei, Samsung, and other brands, which will be available. Now, what was planned earlier on was actually they would launch this 5G still next year pa. But now they've actually said they will be doing it step by step, starting with the launch from today. And you can see actually Tel up by 1.4% amid this news. Now, another one that is joining in the chorus of wanting to provide services, that is the Villar group of companies. This, according to the Philippine Star, they're launching their internet unit. It's called Stream Tech Systems Technologies, and this will be part of the Villar-owned Prime Asset Ventures, or PAVI, which is owned and founded by Paulo Villar. So they're actually going to be taking over the existing internet systems of Planet Cable, which already has operations in the three regions, so Luzon, Visayas, and Mindanao. It will now be under Stream Tech. So they're going to be offering fixed broadband, residential for SMEs as well, and also e-connectivity for enterprises. And also, you've got Converge stepping up nationwide expansion. They're saying that they're going to be expanding. So now they're mostly in Luzon, actually. They've got 30,000 kilometers in length in terms of high-speed fiber network, and they're hoping to expand from Luzon towards Visayas and Mindanao as well. Now, very interestingly, they said that during the pandemic, they actually saw an acceleration in number of new subscribers precisely because of the pandemic. So in May 2020, they got 50,000 new residential subscribers, and in June, even more than that. So 60,000 new ones. So they're actually exceeding the record by 20%. And in the meantime, despite the fact that they've had difficulty rolling out, they were still able to add several new ports during this period. And of course, we all know that they are in the process of getting their IPO listing approved. They've recently submitted it to the SEC. That's going to be a 36 billion peso initial public offering targeted to happen on October. So a lot of things going on the telco front. Let's take a quick peek at the renewable space. However, you've actually got First Gen. So this, interestingly, has been one of the companies that has now joined the ranks of those in the green for the year to date, together with PLDT and Pure Gold. They have now said that they're expecting to start building their liquefied natural gas, so the LNG terminal project in Batangas, and that's going to be happening at the second half of the year already. Recall that just last week they had already said that they are choosing three firms to participate in the bid. One from New York, one Norwegian, and another one which is BW Gas Limited. So this bidding will be commencing in September and hoping to actually be building that LNG terminal by the second half of the year. First Gen, you can see on my terminals here, up by 2.7%, 26 pesos and 70 centavos. And speaking of renewable energy, you've still got Ayala's renewable energy unit, or just energy unit, but mainly focused on renewables. In particular, they've got this affiliate, UAC, which is, of course, operational in Australia, and had already a stake in Australia's Infigen. They said now that they have received 20% of the shareholding interest in Infigen Energies. They had purchased some shares as of Wednesday for 86 Australian cents per share. The energy firm is actually 75% owned by AC Energy. And recall that they had bid, they wanted to acquire Infigen, but it seems that they have now conceded to the rival bidder, which is Iberdrola of Spain. Iberdrola had hiked its offer price upon receiving more share tenders. So still, AC Energy saying the company is pleased to have met its objective. They now have a 20% stake in Infigen. So a lot of interesting developments here. Let's take a quick peek. AC, however, down by 0.3%. AC Energy unchanged at the moment, and we're going to be checking in on the markets again later on in the broadcast with Regina Capital's Luis Limlingan. Let's check in on headlines we're watching this Thursday morning. Proposals to tax your digital subscriptions are moving along, guys. This is after a House panel on Wednesday approved a bill placing a 12% VAT on digital services, particularly foreign-owned ones like Facebook and Netflix. The move to tax the digital economy comes amid the government's resolve to look for revenue sources amid the COVID-19 pandemic. The Finance Department estimated an annual revenues from this may reach 10.6 billion pesos. The measure covers service providers operating buying and selling transactions online, those supplying ad services, and those providing digital services in exchange for a subscription fee. The move previously drew backlash from small businesses, but House Ways and Means Committee Chair Joyce Alceda insisted they will not be affected. The digital tax bill is set to be taken to plenary for deliberations next week. Now, aside from measures generating more revenue, Salceda also believes that the government needs to discuss the possibility of a third round of social amelioration payouts for vulnerable households. The lawmaker noted that some families failed to receive financial aid during the first two rounds of SAP, while the number of jobless Filipinos continues to grow. Salceda estimated that another 1.7 million workers may be displaced by the end of September due to the pandemic. Under the Bayanihan law, the government distributed two tranches of subsidies worth 5,000 to 8,000 pesos to low-income households affected by the lockdowns. Salceda said some 2.2 million jobs also affected by the lockdown were not accounted for when the SAP registry was completed in April. He adds that the total will likely increase to 3.6 million. That's by the end of July. The Bayanihan 2 bill, which has just been approved by the Senate on final reading, provides for another tranche of emergency subsidy for low income households, but only in areas under ECQ. After a meeting with airline representatives, the government said it is now, quote, studying various alternatives to revive the industry. It was among the hardest hit during the pandemic as their fleets were idle due to international and domestic travel restriction, as well as customers' general reluctance to travel. DOF Secretary Sonny Dominguez said the exact content of the bailout for the industry remains fluid pending congressional approval of economic recovery measures. Early this month, officials from PAL, Cebu Pacific, and AirAsia called for the prompt passage of the 1.3 trillion peso stimulus package called Arise. The proposed measure sets aside some 70 billion pesos to aid the transportation sector this year. The Bayanihan 2, on the other hand, provides for a 17 billion peso rescue package for the sector. More of the economic news when Business World Live returns. Stay with us. You guys are back watching Business World Live. I'm Danie Laurel. We are now down to the last trading day of July. Can you believe it? And there's still not a lot of clarity how to navigate this uncertainty. Here to chat about that and other opportunities, we have with us Regina Capital's Luis Limlingan. Good morning, Luis.
Morning, Danny. Nice to be back.
Thanks for being with us this morning. Now, I want to kick off just with general investor sentiment after the president's penultimate State of the Nation address. The bourse since then has still been trading below 6,000 levels. Tell us, is there any optimism still going on here? What's the general feeling?
It seems, I think, that it's more like a wait and see approach. Obviously, uh, I think the investors were expecting a more granular strategy as to how they're going to address the pandemic. Obviously, it was good that they acknowledged the medical professionals and the people who were stepping up to volunteer. So probably yes, maybe in the broad strokes, it was uh, well received, and I think later on they're going to be waiting on for the stimulus that's coming, such as Arise, Create, for example, with the Fist. Those are probably going to help the banks, help small businesses as well. So probably, I think they're more forward looking at this point. Probably, yes, the sauna was important, but now it's become secondary. GDP is going to be out next week, and I think that's where the focus is going to be uh, in the next couple of days.
Luis, there's still some debate on in terms of how much stimulus we can actually keep adding here. You've got the finance secretary saying that we can't afford a bigger budget gap. You've got the vice president saying we need more stimulus. So what actually do the markets really want right now? Can we actually be having more stimulus in businesses at the expense of possible, more taxation? There's digital tax, bigger budget gap that we might not be able to fund, and now our debts ballooning.
It's really a difficult balancing act at this point, and obviously, if in an ideal situation, it's really a stimulus. that's what's needed. It's a Keynesian model that when the economy is suffering, you need to uh, boost economic activity. But we're juggling with so many things. It's hard to raise revenue, obviously, because businesses uh, are a lot of businesses have been closed, uh, and then for taxes as well. Now, of course, we're trying to preserve our credit rating, so it's in a tight situation where we're trying to see where we can test the limits of our borrowing. Obviously, what's good right now is that if we borrow outside, the peso has been strengthening, so that's working in our favor. And of course, it's a timing issue. How long are we going to be borrowing and stimulating the economy, given that there's no vaccine in sight? And where is it going to be best used? Are we going to try to isolate or use the money to um, to help the patients or with the economy? So it's really a difficult situation. This is something that is quite unprecedented. What makes it difficult moving forward?
Okay, so not a lot of clarity here. We still have to wait on their decisions to be made. Let's talk about specific stocks, regulatory stocks back in focus after that sauna. Let's kick off with the telco space here. Do you feel that those threats are actually real threats? And is the market actually seeing these threats as really possible that they could be shut down? Right after these announcements, there are new strands coming out. You've got Converge rolling out. You've got Villar Group announcing plans. Is this a risky situation for the incumbents?
Right now, I think it's a bit too early, and those who sold are immediately probably we're just basing it on emotion. Let's keep a few things in mind. Logically, the telcos still have their franchise, unlike what happened with ABS-CBN, where the problem was with the renewal. Second, he told them that he wants to improve the service, and he's giving them a deadline. Now, I now probably the point of contention and what makes a certain level of ambiguity is what exactly is the service that we're talking about and how to define it. Yes, everyone is complaining, but how are we going to measure it moving forward? And of course, is this going to be a reasonable timeframe? We gave them, I think, end of the year. Let's see if there are going to be improvements, and you don't know what's going to happen between July and December, whether it's the telcos or the pandemic situation. Probably attention might be diverted somewhere else. So I think it's rather too premature right now. And you've seen that telcos have kept steady over the last few days. Yes, there was a bit of panic selling in the beginning, but you saw that, or we've been seeing that the telcos right now, the prices have been holding steadily as of this moment.
Luis, what's the sentiment of foreign investors and even just FDIs in general coming into the market? Is this a real concern for them? The regulatory issues back on the table, which had been put on the sidelines during this COVID-19 pandemic, but now even the water concessionaires are now being looked at, the ABS-CBN shutdown as well. Is this keeping investors at bay?
Well, obviously, it is a concern. But I think this is taking a backseat to how the Philippines is going to adapt or recover from the pandemic. Again, that is going to be secondary. Meanwhile, I think what they're monitoring is the number of cases uh, that are being accounted for, since they still haven't really well, we haven't seen them really. They've stabilized to around, I think, 2,000 daily cases. But what we want to see is with the rest of the economies, such as those in Europe, where you've already seen that it's bottomed out and there's some recovery. Second thing is uh, the signals that there really is a recovery. One is slowly migrating from GCQ and relaxing the requirements, curfew, travel restrictions, and many other things. So those are what the foreign funds are monitoring. Given that service oriented, I think 12% of our GDP is dependent on tourism. So those are much bigger uh, key components and factors that the foreign funds have been looking out on a more granular level.
Okay, Luis, let's move on to earnings, specifically the banking space. Can you try and help us parse through what those earnings mean? Most were, of course, due to the loan loss provisions, diba, which had been expected naman. But when you take a look at the loan growth, meron pa rin namang loan growth in the first and second quarters. but they are now expecting that to to go down, to taper off, despite the fact that there is already, easing from the BSP. And this not worrying, given the fact that interest rates are very low, the margins might now be compressed? And does it matter whether your, bank is more exposed to the MSME sector, more diversified? Tell us your outlook on that space.
Well, the two major banks, BPI and BDO, they did up their loan provision. I think BDO, they made a they set a provision of around 20 billion, and I heard that the rationale for that is that's already that takes into account a huge estimate for the rest of the year. So it's not just for the second quarter. I think BPI is just seeing how the market and the pandemic, continues, and that's why right now it's only at 15 billion. Now, given that, loan growth has still been rather strong, given that it's only been the second quarter. Let's let's try to backtrack and think at that time that when we did have the lockdown, nobody was really forecasting that it would continue this long, and maybe that the situation would be, or rather, the situation would be under control. Probably moving forward, the banks are going to be more selective. There could still be a possibility of steady loan growth, but I think they're not going to be as focused on on retail as much. Maybe looking into corporate in terms of their lending. Maybe even focusing their strategy to trading. In fact, if that's going to be the case moving forward.
Okay, so actually possibly looking into other fee-based income here, to compensate for those loan losses. Luis, last question on some opportunities coming up. What's your feel on the upcoming A REIT? Is this actually something exciting for you? It was priced lower than what I had hoped, and the yield is now hovering, a little lower than 6%. Tell us, is this something that is more attractive than actually just buying Ayala Land stocks, in particular, given that there's so much vacancy in commercial and retail, you know, uh, uh, property space here? And finally, also converge your ideas on that IPO. Is that going to be well received?
All right. First, with regard to the REIT, I think the reception would be taken rather positively, based on I've been hearing anecdotes on the subscription, and I think it's rather healthy. For one, given a bear market, 6%, assuming a 6% payout uh, in this type of market, I think everyone welcomes that. Now, maybe in the short term, it's going to remain at that level, given that there are a bit of headwinds with regard to the real estate sector. But moving forward, should the situation improve, probably we're going to see a much better payout. Now, again, it's you as an investor, you have to decide for yourself if are you happy with that type of um, reward. Obviously, high risk, high reward. Here, it's a much lower risk since the properties that are being listed, I think, are much more stable. But of course, you get your 6%. So I think that's one way to look at it. Probably it's a means to park your funds and wait until uh, the situation improves. With regard to Converge, I think, well, it's still in the book building process, and I think they're trying to weigh the appetite of investors. Um, I well, I think right now probably it's more on the pricing issue at this point, and of course how they're going to use those funds moving forward. It's still probably a bit too early to make a call on this, given that there is no price yet, and we're still trying to get more details with regard to the fundraising activity.
Okay, so one to be watching out for there, but the A REIT, a possible good way to be parking the funds in the meantime during this risk averse environment. Thank you so much for those insights. That was
Thank you.
Luis Limlingan of Regina Capital. And that's a first look into the business day. Today is July 30, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are one.